I'm Charlotte McLeod with investingnews.com, and here today with me is Scott Melbye, Executive Vice President at Uranium Energy and President of Uranium Producers of America. Great to have you.
Charlotte, it's always a pleasure to get together with you, and so much going on in nuclear and uranium. We can get caught up on everything.
We will see how much we can get through today. As you said, there's so much going on, and it's been a little while since we last spoke. I think it's been just over a year. So I thought we could set the stage just by getting your thoughts on where we are in the cycle right now.
Yeah, listen, I think it's 42 years that I've been in the uranium and nuclear energy industry, and I don't think I've seen a combination of drivers behind the nuclear thesis like we've seen today. We have the green energy transition, which is won over people on the right and left, and that's translated into very positive policy developments. We have just the need for huge amounts of energy in society today, not just in the developing world, but the established markets. You have the geopolitics that have obviously thrown our markets into a bit of a challenge. And then just supply and demand fundamentals. We are growing in nuclear power faster than we are building uranium mines. So that's a very bullish outlook for uranium prices.
We will get into all of that and so much more. I wanted to begin with the price because we've had some frustrating price activity over the last maybe year and a half or so, except it's turned around in recent weeks. What is driving that? I know we had the Sprott Trust financing that provided some steam, but what are you seeing?
Well, I mean, the spot market for uranium and frankly, the long-term market for uranium was on sleep mode. We had the utilities at well below replacement levels of contracting. There's a lot of reasons for that. I think last year utilities were dealing with the Russian uranium ban and whether they would get waivers and whether those materials would be available to them through the end of the ban that kicks in 2027. Then you had tariffs. So I think if the global utilities are consuming 200 million pounds a year, they should be contracting at that level going forward. And they've been at 30, 40, 50 million. So that will pick up. But the spot market also was very low volume, and we saw prices drift down to the low 60s and kind of be range bound in the $60 to $70 range. That changed with the Sprott financing, 200 million 3 weeks ago. And it's coming at a time which typically the spot market is very quiet. So it did inject some life. Price did go up to about 78.50, 75 or so, and now is kind of trading around 75, 76. It's all positive. I mean, I would have expected a higher impact from the Sprott financing, but when the smoke clears, there's over 2 million pounds less splashing around the market than there was before. And that will be good going into September. The World Nuclear Association, when the utilities typically, they wake up from sleep mode and start getting active again. We have seen some RFQs, requests for proposals and quotes for long-term supply from a couple of U.S. utilities. So it may be happening a little bit sooner, but that is very bullish. For the last 6 months of this year, it should be very strong.
Right. I think everyone always wants to know what's going on with the utilities. And the question this year has been, when are they going to start buying? So we've gone over that and just a little bit more on the price. So we've been talking about what's going on with the spot price. And it's probably worth also talking about that divergence we've seen between spot and term, which now seems to be closing.
Yep.
And it sounds like that will probably continue to close.
Yeah, there's a lot of discussion whether long-term pricing is the appropriate thing to measure the market by or spot. I think the answer is both. Both of them are relevant. The long-term price is where producers and utilities are willing to lock in contracts over a long term. You could call it the hedged price at any given time in the market. But the spot price is also important. That's where you can buy, maybe not millions of pounds, but you can buy pounds in the spot market. And sometimes we like that indicator because the supplies are thin, and other times we're frustrated because traders are weighing heavily on that. But I think if we were truly in a supply deficit like we are today and going forward, that spot price should strengthen. And they play off of each other. The stronger the spot price moves, the more the long-term price will react, and vice versa. If the long-term price goes higher than 80, 85, then the carry trade dynamics are there to allow traders to buy spot and carry it into the long-term market. So It's been frustrating first half of the year in that regard, but I'm very confident that we're going to see very robust price improvement through the end of the year.
Well, that is great to hear. And on the note of pricing, so when we had our last conversation, this was all the way back in March of 2024, you're talking about how Uranium Energy doesn't want to be locked into contracts where you have set prices. So tell me about how that strategy is looking right now, what you're doing.
Yeah, I mean, listen, we're very different. We're not like the others in this regard. We believe that the fundamental shortage in the market over the next 5 to 6 years is going to translate to higher prices. If we would have locked in contracts over the last 5 years, we would have been locked in at prices well below even current spot and long-term levels. In a sense, it's not my job to hedge the utilities upside risk. It's to get the investors, our shareholders, the highest price we possibly can. And we feel quite confident in that happening. But it's also helpful because we're a producer that has been bringing mines back into production in Wyoming and doing the same in Texas. And we haven't been pressured by having signed too many contracts too early. And we've seen some other producers really in a bind because they've contracted, gotten ahead of their production ramp up, and they've had to buy pounds to supply their contracted supply or sales. Listen, it's not for everyone. The sales volumes that we're going to be moving, going to probably 1 million pounds of production next year, to 2, 3, and maybe up to 5 to 7 million pounds by 2030. Those are totally manageable, not just in spot market sales, but also we have agreements and relationships with utilities, SMR developers. Even the Department of Energy is likely to buy more uranium in the Strategic Uranium Reserve going forward. We don't want to have it all tied up. We want to make it available for those sales.
Really good to go over that. And because you're talking about the production ramp up, we should definitely go into that. I know there's a lot going on. You've got work progressing in various areas, including Wyoming and South Texas. So what should we be paying attention to in the coming half year or so?
Yeah, so July, end of July is our year end fiscal year. So we'll be reporting our first production from Christensen Ranch Irigaray, which we've been producing from the existing well fields that were shut in back in 2018. So naturally, these aren't going to be this is the tail end of the depletion curve of those well fields, but we'll report those volumes and likely within guidance that the street is indicating for UEC. But the bulk of the construction over the last 6 months has been on new well fields, 10-7, 10-8 at Christensen Ranch, building new header houses, drilling out the well fields. Those are fresh new well fields that get the complete depletion curve. So we'll see a real step up in production in the next 12 months. And also we'll begin to activate the well fields at Burke Hollow and Hobson down in Texas. Should be around October startup. It's been a flurry of activity in both Texas and Wyoming. I think we have 14 rigs operating in Wyoming and 10 in Texas. So we're very excited. It's been long in coming, and I know treading water and holding back during the downturn was very frustrating, but it feels good to be back in production.
Yeah, it must feel nice at this point. And important to note, so all of this is going on in the US. So let's talk also about the executive orders from Trump on nuclear power. So of course, the broad consensus is this is positive, but there's so much to unpack. So what would you pull out as the highlights?
Well, I mean, listen, these executive orders on nuclear, I would put on par with Dwight Eisenhower's Atoms for Peace in the 50s. That really spurred the global commercial nuclear power industry. But this is obviously very focused on the United States. President Trump wants to see a quadrupling of nuclear power by 2050. That's pretty ambitious. That's more than the tripling of nuclear power that the kind of WNA and 31 countries and 14 global banks have indicated. But if it was just words, it wouldn't mean much. But he's backing it up with policies, NRC reform, trying to get the licensing and permitting of reactors down to 18 months or less, 6 months or less for small modular reactors. That's important, not only because it shortens the timeline to get these plants into production, but it also unlocks private capital from public capital markets or private equity that are willing to put hundreds of millions, if not billions, into nuclear energy, but they don't want the uncapped, unknown liability of permitting and licensing. And so if you're Microsoft, Amazon, Google, and you're now much more likely to make that funding available for a small modular reactor for your data center if you know that the NRC is going to be very responsive and allow you to get that plant into production operations sooner. There's also support for the fuel cycle, uranium conversion, enrichment, not only for our energy security, but defense, national security. I think you could see Defense Production Act being invoked here to stimulate more production of not only the raw material, but the processing and enrichment. And then we see permitting and licensing timelines for mining operations. Basically, the White House has said, if you are a uranium miner developer and you've been held up by government action or inaction, come to the White House and tell us what's holding you up, and we'll break that log jam. And that's already resulted in a number of projects being put on that list. We've been seeing EPA issue permits that, almost instantaneously that would have taken years before. For UEC, we have a project, Sweetwater, that we would like. It's fully permitted and licensed to 4 million pounds of production from conventional mining. We would like to get a license amendment that converts a portion of that mill capacity to ISR processing, in situ recovery. And we don't think that should be a 6-year, full licensing. We think it should be an amendment that could be 6 months. So we're petitioning the White House to hopefully see that happen. But that's, if you want more critical minerals, uranium, oil and gas in the United States, this is what it looks like. You make it available and easier for industry to do their job.
This is exactly the direction I was hoping to go in, because often you'll see these government announcements and you see it and then you wait and wait for it actually to turn into something. But this time it does feel like it's different, is what I'm getting from you.
Yeah, and I'm not criticizing, the United Kingdom, but they've been, both Labor and conservative governments have been very positive towards nuclear, really strong nuclear policy. But where the rubber meets the road is the hard actions, is what many have said hasn't happened fast enough. And I think whether you love President Trump or you hate him, you have to admit that he does what he says he'll do. And so, I think if he's directing the DOE or NRC or any of these agencies to step up their game, they have to report back in 90, 120, 180 days and explain to the White House what they've been doing to fulfill the orders. That's very businesslike and very encouraging for our industry.
Really good to go into that. And because you had mentioned the data centers, I want to take a little bit of a detour into that area. I know that's something that's developed since the last time we talked, and it's a little bit old news at this point, but it continues to develop. So I wanted to ask about the significance there of these big tech companies coming in and looking at nuclear power.
Yeah, listen, we've had 7 consecutive years of plus 25% power demand growth from data centers. And that's before the whole AI push that we see happening. In the Commonwealth of Virginia, I think, within 2 years, 40% of the electricity generated in the state will be consumed by data centers. And that's really coming on top of society already becoming more electrified and a high-tech society, transportation, EVs. And now you layer on these data centers. We need a lot of power and we need it quickly. And that's going to favor natural gas, nuclear, and probably allow some coal plants to run longer than they would have. But if we don't do all 3 of those things, we're not going to keep up in the AI race. And we will potentially have blackouts in regions in the United States, which is unacceptable. So it's not surprising. Google, Microsoft, Amazon, these tech companies, Oracle, are all spending hundreds of millions, if not billions, on energy infrastructure. It's the only thing that stands between them and multi-trillion-dollar market caps. And so we're very encouraged. And I think President Trump sees the importance of this. One of the executive orders even said if they could make federal land available to new SMRs and new power plants that could power, like even on defense sites and bases, that the power could be resilient, uninterruptible power for the base, and power data centers. Let's build them on federal land and build them faster. But it's, we're already doubling in nuclear power generation by 2045. That's before this whole push with SMRs and advanced reactors. So the story is compelling even without that, but with it, it's we need a lot of uranium mines and we need them built quickly.
Really great points there. And I will let you go and get back out onto the show floor unless you had any final thoughts you wanted to add.
No, I think it just for investors, whether you've been you've persevered and you've stuck with the stories and the names, I think you're going to be really rewarded by that patience. But I think there's a lot of new investors in the space that are being brought in by the story or returning to nuclear. I just think it's going to be, an epic year for returns on uranium investments across the board. And I think companies like Uranium Energy Corp, Uranium Royalty really give you direct exposure and torque. And with UEC, it's U.S. exposure, which is an added benefit.
Yeah, it sounds like the perfect thing right now. So great place to wrap up. Thank you so much for coming on to talk about uranium and the company.
Thanks, Charlotte.
Once again, I'm Charlotte McLeod with investingnews.com, and this is Scott Melbye.